Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 15th of April, 2026. War? What war? Stocks approaching record highs. We're 2 months in. We closed around about 10 points in the S&P. That's points, not 10%. From record highs, basically. 12 points in the end. As you know, there was a slightly cooler than expected PPI print. Bank earnings were strong. While they were strong, they weren't necessarily, the share price reactions weren't necessarily that strong. But Citigroup had its highest quarterly revenue in a decade. BlackRock pulled in 130 billion in net inflows. And oil sort of fell sharply back. So we essentially are ignoring the fact that the Strait's still closed. There is a report from Trump administration officials, so grain of salt here, that 20 ships got through last night in the Strait of Hormuz, and that the US stopped about 6 ships. There's varying stories on that. Look, at the end of the day, it's very difficult unless you've got your own satellite at your disposal, then to be able to actually track that. But and even then, you've got a lot of these things, these ships turning their trackers off because they're worried about being targeted, etc. So if 20 ships did go through, everyone's clearly forgotten about Scott Bessent's not Scott Bessent, Pete Hegseth's comments over the weekend that that Iran's lost naval mines in the Strait. So either that, or they've managed to find 20 of the ballsiest captains in history. So we're now at 44 days to normal supply. If the peace deal was reached, we've got a double blockade going on. I find it really hard to believe that 20 ships got through when Iran's stopping, anything related to the US, and the US is stopping anything related to Iran. I mean, I don't know. I think there's people like Iraq and Kuwait who are sort of putting up their hand and saying, "Bring your oil to us, and we'll, we're sort of piggy in the middle, or we're neutral ground. We'll try to push it through there." But I think at the end of the day, if that is happening, then it is definitely a sign that they wanted to have peace talks. But look, this overall here, the gasoline prices affecting consumers. It's still, the longer this drags out, the more it's going to cost consumers. There's an interesting article and study on the midterm elections, which is still a long way away, but we're starting to see Democrats, as per usual, shoot themselves in the foot, losing a Congress member and a Senate member for poor conduct of the sexual harassment nature, which obviously doesn't help. But electricity and power bills and general energy and cost of living is massive at the moment, and is essentially the top priority for people who are voting coming into the end of the year. So there is time around it. I did a little bit of research this morning around what are the quick fixes there. Natural gas is the main quick fix. Nuclear is very long term, and and then probably restarting some old, or not decommissioning some old power plants, which sort of plays into a few names in the States, like Constellation, etc. But I think it's probably too far out at the moment. There's too much going on for there to be any major announcements. But I would expect Trump to try and the administration to try and get ahead of this and address this, because at the moment that topic would be the deciding factor as it stands right now in the midterm elections. So whether there's some, and supposedly there is in the polling there is a lot of hatred towards the Mag 7 from constituents and data centers. Because they're blaming them for for driving up electricity prices. It's probably fairly justified, but I think there's some other things at play there. and they can sort of, the public are starting to demonise those, and then I mean you bring into the fact that they're not only is it pushing up their electricity prices now, they're building data centres, to increase AI capacity, which is going to cost people's jobs. So, it could be a little bit of a storm brewing generally there. I'd say, on the face of it, Trump is saying something along the lines of, or attacking the Mag 7, but probably having private conversations with them and saying, just let us get through this election and we'll just wind you back up again. But I think it'll be interesting to see how they're going to deal with this, because the gas prices on top of this, at like $1 to anywhere up to $2 higher on top of electricity costs, which in some states has gone up by 200% in the last 5 years. Becomes a major issue. So you can just see here it was the Mag 7, or the mega cap names that really rocketed back. We had the bank stocks as well report pretty good earnings. I mean, overall, Citigroup was really the only one that rallied. JPMorgan, as expected, Jamie Dimon was pretty dour. Wells Fargo got smoked on I suppose it's 36 billion in private credit exposure, and you've also seen the oil companies head back down towards the lower levels than when this whole conflict started. So oil's still even at $91 or $93 thereabouts. They're still 40% higher. Yet these oil companies are actually lower than where they were. Micron had an incredible night. So did AMD. Really, this is just flat out like a risk-on sentiment overall, as you can see from the market map. But look, there were some comments out of these banks. It was mainly deal making that did the heavy lifting for a lot of these guys. But there was some caution shown from and I think that Westpac sort of didn't start a trend, but Westpac's move to essentially require higher capital ratios and to start to bolster their balance sheet because of the effect that these oil prices are going to have on people's ability to pay mortgages, etc., will be a trend. And I dare say that the Fed's going to ask those US banks to bolster their books overall. Jamie Dimon did make a comment on AI and how dangerous basically this new Anthropic model is, and how dangerous AI could be to cybersecurity as well. So there wasn't anything out in terms of major announcements around that sort of meeting between Scott Bessent, the major banks, and Fed Chair Powell overnight. Bit of a behind closed doors meeting. If there was some positives, I would have assumed they would have announced it. So, but look, we're at this point. You can't fight the trend. Look, we've taken the tact overall that most of our high conviction stuff is done via structured investments over 12 minimum, if not 24-month periods. So we've had massive comebacks in all of that stuff, and we've really only held a lot, our high conviction names anyway, which includes the likes of BHP and some US names and things like Telix, which have been doing pretty well recently anyway. And we're pretty happy to have some cash on the sidelines. So one really interesting stat that came up is in years of midterm elections, like there is a very high or abnormally high chance of an average 18% pullback in the 12 months leading up to the midterm election. Doesn't always happen. But it is quite common, so that's something to probably watch out for. We're looking at an investment where this sell in May will probably one of those cliches we love will probably play out, and then and then doing what we call a buy the dip or a look back strategy in the index. So basically, it's a again, it's a structured investment around options, and essentially you get the best weekly settlement as your entry price in the first 6 months, and then it plays out in the index category over the course of the next 3 years. And statistically, it improves particularly in periods like this where the market's overvalued, and we've got 7 of the 7 valuation indicators, like the Buffett indicator and forward PE and things like that, all flashing red, and then a potential for there to be inflation and softer growth, and on top of this election year stat as well, it improves your overall performance if you manage to buy into that dip by 4 or 5% per annum, or anywhere up to. So statistically, that's a really good play at the moment. So we're very happy to be patient. Certainly won't be buying anything at these levels at the moment. I certainly wouldn't be going short either, I've got to say. I'm very surprised that we've managed to get back to these highs. And with things not necessarily playing out, the market's just very happy to drink the Trump Kool-Aid. But now we're in earnings season. We don't tend to have massive moves around earnings season from an index level. So because we're always waiting for the next major earnings. So and these will only be affected 1 month out of the 3. So there's still a fair bit of optimism, and God love the US and their optimism. I mean, it keeps us in the game overall. But yeah, look, the likes of copper, silver, gold, and things rallying back, and lithium, uranium, etc., is going to help that Aussie market overall. And probably keep us, hanging in there. And I look, the energy sector's been pretty dour for the last 2 years anyway, in Australia, and look, investors there are pretty used to being disappointed. We've got Bank of America, PNC, and Morgan Stanley coming up tonight. Tomorrow we're going to have employment in Australia, and we've got Netflix, which will be, I would imagine, after the close. It'll be Friday morning there, and then Blackstone was a little bit earlier, as you heard before. That was BlackRock pulled in 130 billion in net flows. Blackstone, different company, obviously. They're exposed to private credit quite a bit. And we'll just see whether those caps on redemptions are going to help them there. So yeah, just if you want to get your portfolio reviewed, you've essentially got till Friday to submit them in, and then we're sort of going to have to make it client only or Mosaic subscribers only. It's been extremely popular. The feedback's been really good so far. So yeah, do yourself a favor and scan the QR code. I think we've done we've done quite a few basically, and said the follow-up calls have been really positive overall. It's obligation free. We don't hassle people after the fact. You're not going to get a million phone calls. So yeah, it's obligation free. We're not a particularly salesy shop, but SPY was looking at being up around about 0.5%. We might even go close to record highs today again as well. We expect some bounce back in that software sector particularly. We've had some. There was a string of upgrades for a lot of the software companies leading into earnings, which makes a lot of sense because while AI may affect them in the long term, they're probably going to have pretty solid earnings, leading in, and we, there'll be, I dare say, a bit of reality of the pace at which AI can actually take them over as a business, not as a technology. Will probably come home to roost, and you've got things like ServiceNow and etc. And Viva and things like that are down like 40-50%. It's a lot of upside room there for those guys to get involved. One of our first recommendations this earnings season has been Micron. It was up 10% last night. That was on Monday. So if you want to get those recommendations, get Mosaic, and you'll get those because we bought that Monday night and it's already up. It's already up around about 11%, and and we've got a good 5 or 6 more really high conviction earnings, earnings recommendations coming up over the coming weeks. So have a great day, people. Enjoy this sort of very surprising pullback. Probably, as I say, review your portfolios and maybe sell into things, because I don't think this isn't necessarily over just yet. It'll just take one ship to catch on fire or be attacked and coming through that strait, and then it'll be on again. So, don't get complacent, and enjoy your day. We'll speak again tomorrow.
Feeling lost with investing? Meet Mosaic. Mosaic is MPC Markets' platform that turns confusing markets into clear, actionable guidance for your portfolio. Discover Mosaic today. Portfolio and trade ideas in one place for clients and subscribers, powered by MPC Markets.